What's up, guys? Welcome to another KIO macro. In this video, we're going to be covering all the macros. I'm going to give you guys my view on the pulse of the markets. We're going to go through a bunch of data, and if you stick around to the end, I'm going to tell you what I think needs to happen in order for us to confirm that an altcoin season is underway, because it's just a matter of when, not if. It may be delayed based on certain things, mainly tariffs, but we're going to cover all of that in this video. So per usual, none of this is financial advice. This is for your education purposes only. All right, so without further ado, let's get started. So here's the first thing. In the month of May, you had Bitcoin outperform all other major asset classes. It outperformed stocks, looking at the S&P and the NASDAQ, and it outperformed gold. So this is a good sign. Bitcoin's obviously near all-time highs. We're going to look at the Bitcoin chart here in a second, but this is just a sign that there's a lot of interest in crypto assets versus other asset classes. Here's another huge metric. We have the stablecoin supply at all-time highs. So the important thing to know is that most on-chain activities are going to require stablecoins at some point. So if stablecoin supply is growing, that means crypto is growing. And over the last year, the overall stablecoin supply has increased by $80 billion, recently hitting the all-time high of $240 billion. What it really is that crypto is still kind of like its own little island, and you have to bridge over to this island. Whereas, stocks and all the other asset classes are kind of connected to the dollar. You have to use stable coins as like the dollar. So like when you go on a stock exchange, you're using the dollars in your bank account to buy these stocks. And you can do that in crypto as well on like centralized exchanges, but on decentralized exchanges and DeFi where you want to get a yield, no matter what you're doing, you have to use stable coins. So what this is showing is that people are taking their dollars and buying stable coins so they can either get a yield or so they can be able to prepare to buy crypto, whether if it's a limit order or a spot order. Either way is good. The higher the stablecoin market cap, that means that's more stablecoins that can go to crypto assets, which will push prices higher. Next, I want to talk about the global M2 money supply. The M2 money supply is basically all of the money that's in circulation, including check deposits, time deposits, savings deposits, and money market funds around the world. Basically just where all the money's sitting. And on average, changes in global M2 tend to be reflected in Bitcoin and the broader crypto market, and it's normally a lagging indicator. So it's kind of like what happens in the global M2 money supply will get reflected in the price of Bitcoin or other markets 12 weeks later. So this white line represents the M2 money supply, and we can see it's been rising, whether it's being printed or whatever. So the more money that there is in the system, that money wants to find a home, right? Especially since most of the money is owned by 3% of people. They like to get a yield on that money. And as we can already see, Bitcoin's been outperforming all other asset classes. So a lot of that money is going to find its way into crypto. And if the correlation holds, the 12-week lagging that we were just talking about, that means we will be looking at $135,000 Bitcoin by September. Speaking of institutions looking for money to find a home, here's a fun fact. 3% of all Bitcoin is actually held by corporate treasuries. Obviously, we all know MicroStrategies. They make up more than 90% of those holdings, but there's a lot of new companies that's joining the charge literally every week. So if you look at this, we went from MicroStrategy and Metaplanet being the only companies being actively allocating to Bitcoin in 2024. But this chart shows May alone. So we got GameStop with over 4,000 Bitcoin, Zap Solutions, DDC Enterprises. You can see the list of these companies. Most of them aren't known. We all know GameStop, but all these other companies you probably never heard of. But supply and demand says that if you have an increase in demand, and then you have a supply that can't meet that demand, prices have to go up. So the more companies that's buying Bitcoin, whether they're known or not, they're still taking Bitcoin off the market, which will force prices to go up. And as Bitcoin goes up, eventually people are going to start taking profits, and that's what will lead to altcoin season. We're going to dive into that a little bit later here in the video. Another bullish metric is that we have active loans at all-time highs. So how important are loans in a financial ecosystem where, well, they're kind of the lifeblood? Loans and liquidity is almost like twins. That liquid needs to flow into asset classes to get a yield or a return. And the same thing with loans. When people borrow money, it's either used to, go into their business to invest, make it a better company, or it finds its way into asset classes. And these are crypto loans. So, you can bet with, probably 90 to 95% certainty that most people are borrowing against their crypto to either buy more crypto or to take that crypto and put it in DeFi to get a yield, so they can get a yield that's higher than what they're paying on the loan, so they can pay their loan back and essentially borrow funds for free. Now, here's another question. Could you imagine what will happen if loans and credit cease to exist? The answer is entire industries would collapse. Think about real estate, think about retail, think about banking, right? Credit, what built America, is what built everything, right? Once we have this property system and you can prove that you own your assets, then you can borrow against it. And then that credit, with capital comes labor. That capital is used to pay people to build things. And that's how we have our world. So it makes sense to think that with crypto loans at all-time highs, crypto prices will soon likely follow. Loans are at all-time highs, with over $24 billion being lent out on chain. And this stat has pretty much been up only since January of 2023. And the last key stat here, we have decentralized exchange or DEX trading volume, not at all-time high, but near all-time highs. The total monthly DEX volume is at $388 billion, the second highest on record. And if you want to be technical, you could actually claim that January's massive outperformance was skewed by the Trump token launch. Donald Trump had his party, then he launched the Trump token, and people were buying that. It was launched on Solana, on, I think, Radium, and the yields were really, really high. So people were buying the Trump token because our president launched a meme coin. So if it weren't for that, this month would be the all-time highs for DEX trading volume, but even still is coming in at number 2. So the more funds that are being traded on these decentralized exchanges, not only is it good for yields, as obviously we're always talking about yield farming, but that just means that people are more interested in buying. So now let's look at some charts. So the first one that we always pull up is the central bank balance sheet, and we have this continually going down. Now, this is a lot of selling pressure on the market. As you can see, at all-time highs, we were at 8.9 trillion. So we've wiped away 6.6 trillion in the central bank balance sheet, which means they're just offloading bonds, right? Now, this, I believe, is part of the reason why the markets aren't already soaring. Like in the last cycle, we saw the central bank balance sheet rising along with the M2 money supply. So the central bank was buying all these bonds from all these companies and essentially filling their pockets with money for them to then go out and speculate with. But now they're actually dumping the supply onto the market. And, remember what we said about supply and demand a few minutes earlier. It does take away a little bit of the juice, but we do have the M2 money supply at all-time highs, and I already showed you guys the chart on how this correlates with market prices. We have gold hovering around all-time high levels, which is crazy because we have inflation down. And then we have the S&P near all-time high levels after they made a large recovery. Okay, so now let's talk about the 4 things that need to happen in order to confirm that altcoin season is underway. The first thing and the most important thing is tariffs. Right? This is a tariff-driven market. We have proof of that because once Trump started announcing these tariffs, we saw the markets drop. When there was good news, we saw the markets pump. Tariffs are more important than inflation. They're more important than GDP. They're more important than unemployment. They're more important than any other metric right now. Before I even get into all that other stuff, I want to kind of shed some light on the real purpose, or at least what I think the real purpose is behind these high tariffs. The first thing to know is that the purpose of tariffs, at least in the United States, is not to generate tax revenue. You have to keep in mind that we can print money and we are the world reserve currency. So we can print money and we can use that money to pay off our debt since we're the global reserve currency. And, other countries can't really do that because a lot of people hold our debt or they owe US dollars. So they can't just print US dollars. They have to either give up some of their own currency or they have to actually create some output, do some work to generate the funds to pay off the US dollar denominated loan. Just like taxes. Taxes aren't meant to make money either. Taxes are a way to control the supply and demand of the dollar. Taxes take US dollars out of the system. Just going back to that supply and demand point, the less dollars there are, the more valuable they are. So going back to tariffs, the real point of tariffs is to have other countries acquiesce to our demands, right? So Trump starts off with these really, really high tariffs and people, they bitch and complain about it. But the whole point is to give us this illusory form of leverage so that we can use it to negotiate, because we can then say, hey, we want this, we want this, we want this. And if you do it, we'll lower your tariffs. So if you have tariffs that's super low, then you don't really have the power. But if something's super high, then it gives you negotiating power. I'll give you an example. Let's say I'm running a shoe company and it costs me $25 to make the shoe, and I want a 75% profit, which means I would want to sell those shoes for $100. All I have to do is write price $200, cross it out, 50% off, $100. So now when people look at that, they feel like they're saving 50% when it was all just an illusion. That's what I feel like the real purpose of tariffs is to basically get our way with these other countries. Now, having that said, that's the first thing that needs to happen in order for altcoin season to essentially take off, because right now we're in this tariff pause. He just issued the 50% tariffs on steel and aluminum. So we have that going on. So we'll have to see what happens with China and these other countries after the pause. I think things are going to go well, but you never really know. So I'm just going to be adaptable and go off of what happens, and I'll have my own predictions, but I'm going to go off of the data. So if the tariff situation shakes out and everything's cool with that, that will set the stage for altcoin season. Okay, I'm going in order. Tariffs, number one important thing that needs to be smoothed out. The number two most important thing, and this is the play on liquidity, we need to see Bitcoin dominance drop, because this is the flow of money. People make money in Bitcoin. Bitcoin's the horse that leads the race. Once they make money in Bitcoin, they feel like geniuses. Then they start taking profits and buying Ethereum. Then they make money with Ethereum. Then they start speculating on other blue chip altcoins. Then it makes its way down to smaller altcoins and then meme coins. Even though we've seen meme coins pump, so it's not the same exact thing. But the fact that Bitcoin dominance hasn't dropped is the reason why we haven't seen Ethereum reach all-time high levels yet. Part of that is due to the corporate adoption of Bitcoin, as well as the Bitcoin ETF, right? So if we look here, this shows every altcoin season. So these red lines represent the Bitcoin halving. The Bitcoin halving represents the block rewards to the miners getting cut in half. So it cuts the supply of Bitcoin coming onto the market in half, right? So as you can see here, after the halving, we always see Bitcoin dominance drop shortly after, right? Almost a year after. So we had this halving here in July, and then March of the next year, we saw Bitcoin dominance drop. Bitcoin dominance dropping means more money is flowing into altcoins. This was the 2017 altcoin season, which was a legendary altcoin season. Same thing here. We had the halving in May of 2020. And then on January of 2021, we saw things start to drop and we had an altcoin season. Same thing here. Bitcoin dominance has just been steadily rising pretty much since the launch of the ETF. Now, what I would like to see is a break and retest of our 62. And I want to see a nice big red candle print and close here, just like we did here, right? We broke under, we tested it as resistance, and then we had this red candle print, and then we went down. Same thing here. We broke under, even though it wasn't that much under. Crypto was way smaller back then. But even still, this still tested as resistance. We had the red candle close here, and then it was down. So until we get under this, right, and there's been times where it's gotten close, but as you can see, it hasn't went up and went under it. It hasn't went under it at all. We need to get a close. We need to break, retest, and close under it. And that will be a strong indication that altcoin season is starting, right? And the higher Bitcoin goes, the better, because the higher it goes, that means more people are making more money, and the more people make more money, the greedier that they all get, and the more they will want to speculate on other crypto assets. The fourth most important thing is that we need to see the fear and greed index get up to near all-time high levels, right? When you look at a chart or any market, it's all people's fear and greed. When people get greedy, they start buying. When they fear, they start selling, right? Right now we're at a 62, so we have a ways to go. And it's kind of been hovering around this area. If we look at the last year, you can see we're around this level. We need to get higher in the greed category. And to be honest, this is a good way to trade. If you just look at the fear and greed index and you take profits when the greed gets really, really high. This was after the election. Once Bitcoin pumped to 100K, people were really greedy because Trump got in. They thought Trump was good for crypto. And then boom, it went down, right? So we need to see the greed get a little bit higher, because greed represents people buying and people buying represents prices going up. Now, some closing thoughts. You know, we're going into the summertime. Summertime is usually a flat couple months for crypto, just because a lot of the fund managers and people managing all the money, they like to go on vacation with their families. And then we have that coinciding with the 90-day tariff pause. So I personally think that the summer is kind of going to be choppy. We might have some dips. But then I think that as the tariff, assuming the tariff situation gets figured out, and then we go into fall season and everyone goes back to work, I think that Q3 and Q4 are going to be explosive. But like I said, I'm going to just be looking at the data. So with that, I'd like to conclude this video. If you got value, drop a like, drop a comment, subscribe, share with a friend. Let me know if there's anything else you want to cover. But with that, thank you so much for watching, and I'll see you in the next video. Take care and trade safe.